Welcome to S&P's European Loan Market Video Overview, detailing leveraged finance trends and activity during April 2013. I'm Suchit Gupta, a member of S&P Capital IQ's Leveraged Commentary and Data Team, a unit of McGraw-Hill Financial that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe, before winding up with themes to watch for in May and early June 2013. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the over 10,000 contacts in LCD's Leveraged Loan Group on LinkedIn, as well as leveragedloan.com and highyieldbond.com, free websites promoting the loan and high-yield bond asset classes. On it, you'll find recent market stats, news and analysis, high-yield and leveraged finance job postings, and online primers that explain key market terms. The links to our new website and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. Loan issuance was 6.7 billion euros in April 2013, while high-yield bond issuance was 6.5 billion euros. According to JP Morgan High Yield Research, estimated inflows into European high-yield funds was 543 million. This brings the year-to-date inflows to 2.9 billion euros, almost 3 billion euros. Secondary markets were up. Loan markets were up 72 bips to finish the month at par 58, while high-yield markets were up 206 bips to finish the month at 104.63. The S&P European Leveraged Loan Index, the LE, finished the month up 0.88%. Default rates stayed level. Focusing on the secondary loan market, this chart details the average price of LCD's European loan flow name composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Secondary loan prices rose 72 bips to finish the month at par 58. The increase brings the average flow names up to a fresh peak not seen since the beginning of July 2007. Since bottoming out at 60.23 at the end of 2008, the average has now recovered to pre-crisis levels, having added more than 40 points over the last 52 months. The current bid is now 324 bips higher than the final reading at the end of 2012. This next chart details the average price of LCD's European high-yield flow name composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. The high-yield market finished the month up 206 bips at 104.63, just 3 basis points shy of the 2013 high of 104.66. The average bid is now 167 bips higher than in the year-to-date, having ended 2012 at 102.96. This chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market had a positive return of 0.88% for the month of April, as of the week ended May 2nd, down from the 0.91% seen in March 2013. This brings the year-to-date return to 3.7% versus 5.19% for the same period last year. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. April's leveraged loan new issue launchpad remained virtually similar to the prior months, consisting of a wave of opportunistic transactions with a tiny dash of buyouts. Out of the 6.7 billion euro total volume for the month, 5.7 billion came from refinancings, led by the jumbo 2.7 billion pro rata facilities for Schaeffler and the 1.5 billion TLH and TLE1 for Kabel Deutschland. April's high-yield bond tally reached 6.5 billion euros, falling a tad short of the roughly 7 billion euros seen in each of the prior months. However, this reading by no means signifies a slowdown in issuance, as close to 2 billion of bonds priced in the first 2 days of May. For the year-to-date, European borrowers have raised 27.8 billion euros in the high-yield bond market, more than double the 13.5 billion euros seen at this time last year, and just 8.5 billion euros shy away from the full year tally of 2012. If the issuance continues at the same pace for the remainder of the year, 2013 can easily smash the 2010 record of 44.4 billion euros. The default rate by principal amount stayed level at 5.9% at the end of April, while the default rate by issuer count fell to 7.1% at the end of April from 7.2% seen at the end of March 2013. Themes to watch for going forward. CLOs emerged back on the landscape, According to LCD reports, there are 4 vehicles in the pipeline totaling €1.5 billion, consisting of vehicles from Alcentra, Blackstone GSO, Carlyle, and ICG. So far this year, 3 vehicles have priced for a total of €964 million from managers Apollo, Cairn, and Primerica. Further spread/yield compression is expected as loan issuers use access to high-yield markets to reduce existing spreads. Along with repricing, some sponsors are tabling dividend recap deals to take advantage of investor demand both in loans and high-yield markets. There's still strong demand for high-yield bonds. So far this year, net inflows stand at €2.9 billion, according to JP Morgan High Yield Research. Bond for loan takeouts will continue to keep pace as issuers address their maturity concern. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to this page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.